Welcome to Coffee with Samso Insights. This is a special milestone for Samso, as this is our 200th episode of Coffee with Samso. As a journey since 2018, Samso has conducted over 300 on the Coffee with Samso platform, the Rooster Talk platform, and the Samso Insights. So in 2025, Samso is going independent. We see this as an opportunity for us to bring content that is relevant to your potential investments if you're looking at that. So in 2025, it is all about Coffee with Samso, Samso Insights. We are going to be changing the direction of where Samso will head from 2025. So anyway, grab your favorite beverage and get comfortable and get ready for another Coffee with Samso. Welcome to another Coffee with Samso. Today we are at, today we're back at the UWA Club here in Crawley on the University of Western Australia campus. And 2025 is the new year for us. We're all about independent content going forward. We will be showcasing this on Coffee with Samso as well as Samso Insights. So today I've got Greatland Gold here with us. Managing Director is Shaun. We're going to be talking about we're going to be talking about how an exploration company became a miner overnight. And welcome, Shaun.
Thanks very much, Noel. Pleasure to be here with you at UWA.
Yep. Look, before we get going, I guess, you've had a very, very interesting 12 months. As I said, you are basically an explorer trying to be a miner, and then suddenly you are a miner. So before we give us a rundown of who Shaun Day is and how you became part of Greatland Gold.
Yeah, thanks very much, Noel. So, look, for the last 15 years, I've been an executive in the mining sector, most recently with Northern Star, which is now Australia's largest gold miner. And, if you look at that Northern Star journey, we bought 6 assets off global majors, off Newmont and Barrick, and putting them together created this largest gold vehicle in Australia. And that's the opportunity I saw almost 4 years ago now with Greatland. We had this amazing Havieron asset in joint venture with Newcrest next door to Telfer. And I felt there was an opportunity that at some stage Newcrest may decide to divest Telfer and with it Havieron. So I came across to Greatland really with a view to trying to buy back that Havieron asset and Telfer. And as you say, somewhat overnight go from being an explorer developer into a very significant Australian producer.
How did it happen? I mean, was it a phone call saying, how did that whole process start, or was it a very well planned series of steps?
Look, it was always the plan. So I had a higher level of confidence that Greatland would have the opportunity to buy back those assets than perhaps anyone else. And I actually knew the Newcrest team quite well. They had tried to bring me across to Newcrest when I was leaving Northern Star. So I already had quite good relationships there at Newcrest. So I felt I was coming in, with a certain level of familiarity with the Newcrest team and relationship that might give me an opportunity to buy those assets. I think actually, as it happens, we were probably potentially going to get an opportunity to do that in 2022. Although what subsequently happened is Newmont came in and did a takeover bid for Newcrest. I'd done a couple of transactions with Newmont. I had a very good relationship with the Newmont team, and I was able to position Greatland where if Telfer Havieron were non-core assets, that we were willing to partner with Newmont and give them what they wanted, which was a clean exit. So we aligned ourselves with Newmont very early, And effectively, of the 7 divestments I think Newmont has undertaken, only the Greatland transaction was bilateral. So we were able to do it just between Newmont and ourselves. We were very respectful of Newmont and gave them the exit they wanted. But equally, I think they were hugely respectful of us and gave us a transaction that we think works for shareholders.
I mean, the price of 475 million USD. I mean, should the everyday investor see that as a fair kind of price? Good, high side. I know 52 million is dead. So how much is Telfer and how much is Havieron, or is that debt repayment mainly Havieron?
So the genesis of that debt is when Greatland entered a joint venture agreement with Newcrest. It wasn't a free carry agreement. Greatland had to pay its share, which is an unusually harsh joint venture. What Newcrest did provide is a loan at 12% interest. So it was an expensive loan. So what we're able to do as part of the transaction was effectively achieve full repayment of that loan. So Greatland is now debt-free, which is extremely important. So we paid net around 425 million for the Telfer Havieron assets. We've never really tried to distinguish the value between those two assets externally. We obviously have our own internal view, but when you look at Havieron, this is a 20-year mine life asset, lowest quartile costs, in a tier 1 jurisdiction next to existing infrastructure. The value on an asset of that size at that cost structure we think is extraordinary. And to be able to acquire an existing meaningful production profile and infrastructure at Telfer simultaneously, we think is a unique proposition for shareholders.
Is it fair to say that if Telfer wasn't next to Havieron, we wouldn't be having this conversation?
Certainly, the life extension, the 20-year life extension that Havieron delivers to Telfer is a huge factor in why we feel the combination of Greatland's Havieron asset with Telfer is a unique value creation proposition. I still think Telfer as a standalone asset is tremendous. Again, if I look at that Northern Star experience, we bought 6 assets from global majors. I think from memory, 4 of those had a mine life of less than 12 months when we acquired them at Northern Star. All 6 of those are still in production a decade later. So there is always this opportunity, particularly at these big endowments that sit inside of majors, to increase mine life. And I think there's that same opportunity at Telfer. So I like Telfer as a standalone, but absolutely the prize here is what Telfer and Havieron look like together.
Yeah, I mean, there are many stories, and I mean, as you stated, Northern Star is a classic of buying so-called not so great assets and making them prime assets for the company. I mean, I have a question here. What and I think you may have answered some of that. Is what is the upside for Greatland? Is it Telfer or Havieron? Is Telfer the gateway for Havieron? Because they've got those infrastructure for you to. Is it easy for you to get to Havieron? What?
Look, I think you should look at Telfer and Havieron as 2 sides of the one coin. We have this existing infrastructure at Telfer that is hugely advantageous. But with Havieron just 45 kilometres down the road, the development of Havieron, which by the way is half built, the decline's already 80%, 81% of the path down to the top of the ore body. That Havieron ore will come through the Telfer mill. So it is this beautiful confluence of existing production plus a growth story and utilising existing infrastructure. And I think the brownfields element, the fact that Havieron is not a standalone development, it gets to piggyback off that existing infrastructure, and not just the processing centre, but the the power station, the camp, the bitumen airstrip, stores, all these in situ elements of Telfer make the pathway to successfully developing Havieron a much lower hurdle to jump over.
Okay. I mean, the all-in sustaining cost, Havieron is what, 818 ounce for 8.4 million ounces. Telfer is obviously be higher, 1,400 pounds. Is that $800 because of the Telfer infrastructure? Or is it $800 because of the geology and how you mine it?
It's a combination. What I would say is the capital intensity of Havieron, how much capex is needed to put this in production, is lower because it can piggyback off the infrastructure at Telfer. So that's the advantage of being next door to Telfer. It's a lower risk, lower capex pathway to development. But the really low all-in sustaining cost at Havieron is really a function of the geology. So two elements about Havieron. Firstly, it runs over almost 8,000 ounces per vertical metre across a full 1,000 metres or kilometre of vertical depth. That's extraordinary. I think anything that's approaching 4,000 ounces per vertical metre, I would see as a very, very good underground mine. And that ounces per vertical metre, I think, is a very good rule of thumb to understand the quality of an underground ore body. But I think what you should understand even more is the true formula should probably be ounces per vertical metre divided by strike length over a denominator of strike length. And so if those ounces are over a 2.5 kilometre strike length, you need a lot more capital and a lot more operating costs to extract them. But Havieron, notwithstanding its big size, 8.4 million ounces already, and will probably be a plus 10 million ounce ore body. So globally significant size, but it's over a very compact 650 metre strike length. So that is hugely advantageous. In addition, large stoping size. Average underground gold mining stope in Australia is probably about 10,000 tonnes. We are running at Havieron 100 to 125,000 tonne stopes. So an order of magnitude bigger, which puts a lot of downward pressure on our mining costs, around $51 a tonne, coupled with the amount of ounces you're liberating per tonne. That's what drives that incredibly low all-in sustaining cost. So Havieron is this lovely combination of low capex and very low opex once we're in there.
For those guys who are on the retail side who are struggling to understand this vertical ounce kind of concept, I remember when I first was introduced to it, it took me a while to get my head around because I'm not from the mining fraternity. Is there a way you can explain that in a layman's form?
Yeah.
Because that's key to what you've just said is key to why Havieron is so attractive in terms of the ore body, because not all ore bodies are like that.
So let me maybe try to illustrate that in two ways. So firstly, if you think about the decline down to the ore body as infrastructure, as in-mine infrastructure, for every metre vertical extent we put in, we can extract 8,000 ounces. Now, let's say in comparison, it was a 3,000 ounce per vertical metre ore body. You'd only be taking out 3,000 ounces. So we get an extra 5,000 ounces for that 1 metre of development. So that's hugely advantageous. And then when I talk about strike length, again, very similar concept. If I have to drive out 2.5 kilometres to get those ounces and mine that zonation, there's obviously more cost, more time, energy and effort to extract those ounces. Whilst I'm only driving 650 metres, it's a shorter distance, less cost. And perhaps what happens when you're over a 2 kilometre strike length is you've got multiple declines. So you're duplicating that infrastructure. Again, just goes to cost. But this is where it's such a beautiful measure of an underground ore body is ounces per vertical metre. It really tells you for every metre of mining, how many ounces you get to extract. And I think it's readily understandable, the more is better.
Coming back to Telfer, I mean, you in your presentation, 9th of December last year, I took out one of the, I think page 10. It talks about but where the upside for Telfer may be. How realistic is that? I mean, you've gone through the numbers, obviously, and you've been from Northern Star. You would have looked at, well, 6 similar kind of projects like this. How do you gauge that?
And look, we've got a team, and a number of the team are across from Northern Star, which we think is advantageous because we have this experience, this collective experience of going through integrations, of looking at this mine life extension. Our COO, Simon Tyrrell, came out of Northern Star, our underground mine manager, Shaun McLaughlin, again out of Northern Star. So we feel we have a team with a track record of doing this type of work. So when we look at that, we had 10 months of due diligence on Telfer. That's an extended due diligence period. That was really important for us. But with Havieron, we've been working there for 3 years. So we think we know that ore body as well as anyone. But if we just focus on Telfer, there's really 2 elements that we think work in our favour here. Firstly, the gold price. The gold price has gone up in Aussie dollar terms about $1,500 an ounce. Well, that makes more of the resource economic. So we're excited about the opportunity that provides us. But more than that, we are going to invest in the drill bit. And that was one of the secrets to success at Northern Star, is that we invested in the drill bit. And we had a little bit of a saying there, you don't drill, you don't find. And again, because this asset's gone from a little bit unloved in the portfolio of a major to now our absolute focus of attention. So we've got more rigs spinning there, which means we delineate more resource, and then we're going to speed up our mine planning process. So again, we're investing in that so that we can convert more of those ounces that we can delineate into mineable areas, into our mine plan. So really, it's this combination of a good gold price helps, but it's just having rigs and speeding up that mine planning process. So we're really confident. A lot of hard work to do, a lot of people working on it as we speak, but we think there's a really good propensity to increase that Telfer mine life. This is a 20 million ounce deposit taken with, or endowment, taken with Havieron. We're talking about a 30 million ounce endowment at Telfer Havieron. It's absolutely of global significant scale. So we love the opportunity that's there.
I think I remember going to a presentation from Northern Star where you guys showcasing that you found 900,000 ounces in Kundana. I think it's Kundana, in between some drill pits, and it was like completely drilled like Swiss cheese, and in amongst there was like a little 900,000 ounces sitting there.
Yeah, look, that I think that would have been that East Kundana, was it the I think the Pegasus deposit. And again, I think one of the geologists there, Darren Cook, had a lovely expression. Well drilled doesn't mean well explored, because from a surface map, it looked like it'd been drilled out like a pin cushion. But understanding the orientation of the ore bodies and all these go into the interpretation to really identify those ore bodies. And again, that's one of the advantages we've got in coming into Telfer. We've got a number of the existing geology team, but we also bring in our own Greatland geology team to augment that. And I think that gives us an opportunity to reinterpret some of the historic understandings of Telfer. And again, I think that the discipline of reinterpreting and challenging some of the conventions around geology, because geology is fundamentally a theory as to how that metal mobilized into that position. Again, I think was one of the great lessons for me out of Northern Star, was continuing to test and challenge those theories and seeing what that can deliver in terms of ore body growth.
I noticed you got 2 10 million ton per annum plant there. Is this kind of is this a lot? Is it, how is that going to fit into the picture? Because you hear people having too big a plant and they just end up trying to feed the plant and then it just goes across, falls off the perch kind of stuff.
So we talked about just the sheer scale of this ore body across Havieron Telfer, a circa 30 million ounce endowment. Again, world-class scale. And so what has that translated to? That's translated into a 20 million tonne nominal capacity mill. Importantly, 2 parallel 10 million tonne trains. That is the third largest gold mining infrastructure in Australia, behind Bonington and Cadia, which, by the way, happen to be both Newmont assets. So, yeah, look, it's a really significant processing infrastructure. It's great to have that capacity. But importantly, it's 2 10 million tonne trains. That gives us wonderful flexibility. So look, it's right now we're running both trains, and at this gold price, we think that's really attractive economics. But we also have the ability to say, well, let's just run one train, as well. So we can mix and match depending on what we think is optimal. And if you have a look at Newcrest, they were at one stage running, the 2 trains at about 85% capacity. When you're running that infrastructure, you really want to get it as close to 100% as possible. We also look at what would happen if we ran one train, not just at its nominal capacity of 10 million tonnes, but perhaps walk that up, because your normal bottlenecks or constraints are not there. Both crushers can feed a single mill. You've got the reticulation of water, power, reagents that have run that infrastructure as high as 23 million tonnes before. So we do think if you just run one piece of infrastructure at, say, 120% capacity, is that more profitable running 2 at 85% capacity? Right now, we're running both, but we love the idea that we can go between those two scenarios, or toggle between them, and both of them are hugely efficient, because filling one piece of infrastructure, and I think even standalone, one of those trains is still either the third or perhaps fourth largest mill in Australia, even by itself. So there's still big volumes there, and that leads to good economics in terms of processing costs.
People used to say that it was the Paddington curse, but this puts Paddington 3 times smaller, because they were running at 3 million, I believe.
Yeah, and look, obviously, if you look at the whole infrastructure at Telfer, it can be 7-fold, but running it at 3-fold. But again, big endowment up at Telfer, and we have there hasn't been a better time to own Telfer since 2005, when it was reconfigured. Firstly, you've got this wonderfully strong gold price, particularly in Australian terms. You've got, we're reinvesting in terms of the life extension, and you've got stockpiles at surface. Just to remind people, we've got 25 million tonnes at surface. So over 500,000 ounces at surface, plus another 20,000 tonnes of copper in that same ore body, because this is a gold copper ore body. So that stockpile is pretty unique. I can't think of another mid-cap with 500,000 ounces plus copper at surface. No. So even if we stop mining tomorrow, we have one train running at another 2.5 years. So that gives us great economics, because you don't have to pay to mine that ore. Maybe a $2.50 to rehandle it. Still apply your recoveries and your processing costs. But it's not just the economics of that. It's the flexibility it gives our mine plan. And then thirdly, we've got Havieron on the horizon coming into that ore body. So I think as part of your questions about the size of that processing infrastructure was, can the mining rate keep up? Well, when Havieron comes online, you've now got that same infrastructure fed by the Telfer open pit, the Telfer underground, and the Havieron underground. So that just slows down the rate of mining you need to achieve at Telfer to keep that mill fed. And that's why we think it's the best time to own Telfer, in 20 years, because of gold price, stockpiles, and Havieron coming online.
Um, do you foresee mining costs? Well, which direction do you see mining costs going? Because obviously we're from a mineral resource industry, small cap sector, we're suffering, right? Most of these companies are suffering. Do you see that as a good thing for people like you? Because you need people to run these things, and is it easier to get them? They're
Yeah.
reasonable.
Look, I think we've our recruitment has worked really well in two ways. Again, having done a number of integrations in my career, normally I would expect a peak in turnover after acquisition. There's change. What we've actually found at Telfer is our staff turnover has gone down. Now that's unique in my integration experience. I think the reasons for that are multifactorial. I think one of it is I think we've handled the integration well because we've done a number and we had some experience. Two, I think there's a genuine excitement at the Telfer workforce that they've gone from perhaps unloved in a large portfolio to absolute laser focus of Greatland. We want it to be successful. But thirdly, I think there is a larger sector area where some of the heat has come out of labour competition. Now you've seen, the lithiums pull back, you've seen the nickel pull back, even iron ore is maybe off those highs as well. And look, I'm sure all those sectors will have, will come back into favour and be rejuvenated at different stages. But at one point, you had this synchronized expansion of lithium, nickel, gold, and iron ore, and things got a little bit heated in the sector. You've seen three of those pull back. Gold is all-time high, and we're appreciative and celebrate that. But what that's mean is it's decreased the competition for labour. So we haven't seen that inflationary pressure in labour, but also I think just the quality. When you're bringing on a 20-year life asset like Havieron, lowest all-in sustaining cost on the ASX, people want to come and be part of it. And we were able to pick the eyes out of the market a little bit in terms of the talent we brought in. I think that's been one of the great achievements of Greatland and why we're able to be successful doing the transaction, why we're able to be successful raising the equity, and why we've been successful to date in the operation is all about the people we've brought in. And if I could name one achievement, I think it's the talent that Greatland has brought into the company is really been our differentiator.
I mean, I didn't looking at your presentation. Obviously, I didn't realize that where it ranks just behind Hemi in terms of undeveloped gold projects. Putting you on a spot, how do you compare the two? Because obviously, Hemi was kicked off just after COVID, right? I think it helped the $2 billion money raising boom, and as well as the lithium run. How do you see?
Well, I think Hemi is a wonderful project, and the team there, led by Glenn, did a great job with the platform, and they're good people and did a good job. But I really see Hemi and Havieron Telfer as very comparable assets. Really, both are great, and both are similar. I think you kind of mentioned, I think Hemi has about 20% more in size, but Havieron is 50% higher grade. On balance, I'd probably rather ore body. And then when you look at, when you add Telfer into that, because we'll do an updated, the first JORC resource on Telfer since June 2023. Currently it's 0 because it's gone into an SEC USA as part of Newmont. So we think when we bring on Telfer on top of that, we're probably a similar scale ore body to Hemi, but with higher grade we are brownfield, so we already have the infrastructure there. We don't have to build infrastructure. And our processing is proven and straightforward. You know, it's not a refractory ore body. It's simple CIL circuit. So, and we have the benefit of some copper credits. So I don't think you really have to distinguish which one you like more. I just think they're the two premier assets in Australia right now for gold. And, you know, one is subject to a $5 billion takeover bid, plus the cost to build it. By comparison, we're trading at about $2 billion in London, plus we're half built, and we take advantage of existing infrastructure. Without taking anything away from Hemi, I think the two are similar. Some people, I think, might prefer Telfer Havieron. Some people might prefer Hemi, but they're very similar, and it suggests the potential to re-rate when we come to Australia, and I think you see that in some of the research notes on us now.
So you just mentioned that. I mean, we talked about that you're looking to list on the ASX in June.
Yep.
Or, how set in concrete is that, and how's that going?
Look, the railway tracks are set. We will list in the June quarter here in Australia. You know, we're an Australian asset, Australian management team, Australian peer group. We should be listed here in Australia. You know, we really appreciate the support we had in London. We did the largest mining raise in London since 2017 off the AIM platform. So normally associated with small companies. And when I joined Greatland, the legacy is we were an AIM platform. Not ideal, but I think we made the best of it. And now we think we get to come to the ASX. By the way, that will be a cross listing. This will be our primary listing, so we would be domiciled here, an Australian company listed on the ASX. But we respect and value that the UK support base we have, so we want to keep a cross listing in London. But we really feel the Australian market understands Australian gold assets and probably has the lowest cost of capital on the planet for resource assets. We also will get a lot of indexation when we come onto the ASX because we're not indexed in London. So we think it's multifactorial why it's advantageous for us to be here. And as I said, we are committed to doing that in June. And when you look at our equity raise to acquire Telfer Havieron, probably half of that were Australian institutions. And for them, our commitment to list on the ASX was an important element of them coming into the company.
You mentioned your market cap's what, 2 billion US
Aussie?
Aussie.
Yeah.
And when you list here, what kind of market cap are you guys looking at then?
Oh, look, it's hard for me to speculate about future share price or the like.
That's what everyone wants you to do.
Yeah, I know everyone wants to do, but I might be a little bit measured. But I think when you look at some of the research in that London market, we trade, depending on which broker research, you know, at about 0.35 value. There's a potential to re-rate. You see the Australian sector, probably trades in the 0.7s and certain ones even as high as 1. So I think there's an opportunity to re-rate. But the best thing Greatland can do to help achieve that is to operate successfully. We want to demonstrate that mine life extension. We want to demonstrate we had a great December quarter. We exceeded expectations by about 33%. That's wonderful. But one swallow a summer doesn't make. We need to do that in the March quarter. We need to do it in the June quarter and thereafter. Not all of them will exceed by 33%, but we want to demonstrate that we are a reliable, consistent, high quality producer and give the market confidence that we can take advantage of this asset base we have with the world-class Havieron deposit and continued operations with Telfer.
Well, you raised 325 million to sort out your acquisition and start operating and things like that. Do I assume that IPO on the ASX is the next raise? And is that fair?
Yeah, look, we finished the December quarter with $145 million in the bank and no debt. So we don't really need free cash. That was just 27 days after acquisition. So that was meant to be the nadir, the low point of our cash flow. I like to think, especially at 4,600 Aussie gold price, that we will generate free cash flow and add to that bank account balance over the March quarter. So we're in the luxurious position of not needing to raise equity. And being debt free is part of that. So our base case is that we'll do just a compliance listing here in Australia. We might look at a very small raising just to create some liquidity here. We think a couple of our shareholders will port their holdings across to Australia as well. So look, creating a liquidity event here is important to us, but fundamentally we don't need to raise equity. So I think it will just be an optimization equation to try to kickstart share trading here.
How much would you say is a nominal amount of raise?
Look, less than 50 million Aussie, I think, would be the ASX might require us to demonstrate market interest. I think that could be up to 50 million, but hopefully they don't. They say, no, you're a multi-billion-dollar company with a high-profile asset. We're confident that this has satisfies the market interest test. So again, our base case is a compliance listing, but I don't want to promise that until we've been through the regulatory process with the ASX, because it is true, or it is clearly one of the provisions in the Act that the ASX can require you to do a small raise to demonstrate market interest, and that is up to the ASX in its capacity of the regulator. So until we've been through that process, I can't be definitive. But from a company point of view, we'd quite like just to do a compliance listing. We don't want further dilution. We really just want to get the benefits of the ASX listing, and we think there's latent demand here that will buy shares and adds a whole new area of demand to our share register.
I mean, the market, especially even in the gold sector, is quite buoyant for acquisitions. When you guys want to look down the list and say, hey, that would be nice, might raise some, not 50, but 200.
Look, my view is to date, I think Greatland has demonstrated it has market support. When we came to the market and said, look, we've got an opportunity to buy Telfer Havieron, and you mentioned the US, I think 375, but in addition to that, we put another 200 into the hands of Newmont. So it was really a circa $600 million kind of raising, including dealing with the debt. So we got some pretty substantive support. So I'm not about kind of squirreling away a whole lot of cash into our balance sheet. I'm a dividend kind of guy. I want to put our cash back in the hands of shareholders, because I should be confident that if we have a good idea, that we can convince the market to come with us. So we won't be building an M&A war chest, because we think if we have a sensible idea, the market will beat down our door to participate in it. And if they're not, we should probably be rethinking whether it's a good idea to buy it. So no, we don't need war chests. We just need capital discipline.
One of the things that, I previously was in the tungsten world. You do have a rather large, I don't know whether you guys do have it or have the O'Callaghan tungsten deposit, which is
we
massive,
have
right?
Australia's largest and highest grade tungsten deposit. So I think the next time you see a Greatland corporate presentation, there'll be a slide on that on our tungsten. It is huge optionality, as I think implied by your question. China has probably been a poor market participant in terms of restricting the sale of tungsten globally. The danger to global supply chains by having China as such a big part of tungsten supply, I think, is becoming self-evident. Clearly, the world wants to diversify away from China exposure. So I think the option value of that tungsten deposit is now really significant. And if you look at companies trading around the world with tungsten assets, perhaps lower quality tungsten assets, they've gone through the roof. So I think there's some great opportunity with O'Callaghan's. We're obviously right now really focused on making Telfer and Havieron a success, but we are very open to ideas as to how we create shareholder value around that very large tungsten, and it's polymetallic, but tungsten is the mainstay of O'Callaghan's. So that's exciting. We were aware of that optionality in the acquisition, but that's perhaps creating value sooner than we anticipated.
Probably needs to be spun out.
Well, as I said, we're open to good ideas. But if we can create value for shareholders out of that asset, it's just 10 kilometres away from Telfer. So it can use the same airstrip, the same site, the same power gen. It's really interesting. So this is one of the world's great tungsten deposits. So, and even I've reached out to the US government around what they'd like to do in terms of how we can bring that into the global supply chain. That's not to say anything will happen in the short term, but it's certainly something we're thinking about, and a spin-off is one of the things we think about to create shareholder value.
Because I think recently I heard a narrative that, because I've have some interest in it, I do follow bits and pieces, and although the price is not where it was at 425 MTU, I think it's a low 300s. It seems to be some narrative that there is a great demand for it. So, and as you know, in this industry, by the time the retail hears of it, it's it's too late. So it kind of like it made me to think that is there something happening? And then now you hear the Chinese are not happy with Mr. Trump, and
well, they put that restriction on before that, but the and in the past they've stopped critical mineral sales to Japan going back several years. So China has a track record in this kind of behaviour. But look, I think it's definitely something that we think about. It's a bit of a hidden gem inside of Greatland, but I think that's just starting to surface right now. And again, we think it's a catalyst for shareholder value.
so do you think you can find another Havieron there?
Well, look, one of the lovely things about the Paterson region is it's undercover. One of the I think a great illustration here is why was Telfer found in 1970, and then just 45 kilometres down the road, Havieron wasn't found to 2019. And it's because it was undercover. Telfer had an expression of surface, so it was found, 40, 50 years ago. The Paterson is generally undercover. Now, cover makes exploration a little bit more difficult, but how do we find Havieron? Through modern geophysical techniques. So we love the cover. If there was another 10 million ounce ore body at surface, it already would have been discovered. By having that cover sequence and needing modern exploration techniques to peer through that, we think there can be more monsters lurking in the deep at Paterson. And if you have a look at it, it's elephant country. You've got the 20 million ounce Telfer endowment. You've got, say, the 10 million ounce Havieron endowment. Up to the north, you've got the Rio Tinto Winnow endowment, which again is huge. So when you're onto a system there, it can be really, really big. So we love the optionality within our exploration portfolio. And again, now that we're a bigger company, I think you're going to see us spend more time, energy and effort investing in the drill program, primarily in the in-mine area to advance mine life. But in addition, you're going to see us continue to invest and grow that investment in the greenfields exploration to find another Havieron, to find another Telfer.
So now that everything's completed and you're on the right, are you sleeping better now?
No, look, super busy right now. Love it. This is what I joined Havieron to do. So as I mentioned earlier, I joined Greatland. I joined Greatland for this opportunity. Havieron is a management intensive underground ore body. It's not normally what the majors keep in their portfolio, and you can see that's what kind of transpired into the portfolio that Northern Star created. It's what I've got experience in, so I think it's tailor-made for Greatland. And then Telfer is this giant expanse, but had just fallen a little bit out of love inside the Newcrest portfolio. So, we just couldn't be happier with the asset portfolio we have. As I said, we had outperformed in the December quarter. We like to think we can do that again in March. But that's hard work, and integrations are not easy. There's still a lot of work to be done. But that's what we want to do. We want to build ourselves, as a credible, reliable producer, and really happy to be busy, achieving that goal. And we're excited about the opportunities that that presents for us. So, but no one thought that Greatland was as likely to be able to buy back Havieron and Telfer as me. That's why I joined the company, and I'm just delighted we've been able to successfully execute that strategy for shareholders, because that's what I've been articulating for the last 3 years. This is our strategy, and not everyone gets to achieve that. So really pleased we've delivered what we said we would to shareholders.
Well, I must admit, and prior to us starting this recording, I did say that Greatland was the last person I thought that would have done this. It appeared to me, and I must admit, I didn't follow you guys a lot. It was just looking from afar that you guys are just happy for the big brother to do things, and then eventually you walk away with a small piece of a big pie. To see it reverse, that sparked my interest, and hence I approached you late last year to have this conversation.
Yeah,
because it's a very intriguing thing. I mean, as I speak to you and I hear what you're saying about Telfer, and it's come from an unloved. Whenever an asset has come from an unloved position to be a focused position, the chance of you finding something, in my opinion, is higher than before. And if you did find something, it's just value added to something that you bought for. It's typical Asian thinking, right? Buy cheap and then you add value in.
Oh, it's great thinking, and I think that's the takeaway from the Northern Star story.
Yeah.
Is when you buy unloved assets out of majors and you give them a new lease of life by focusing, by investing in management, by investing in the drill bit, by driving productivity, you can achieve great things. And that's the opportunity I see at Telfer. Havieron's remarkable because we're not buying a 20-year-old asset. The best years of Havieron are ahead of it. This is a world-class ore body that we get from day one. And we'll come out with a Greatland feasibility study on Havieron in the second half of this year and really demonstrate, we think, the potential of Havieron. But how many mid-caps can demonstrate a 20-year mine life, lowest all-in sustaining cost? It's virtually unique. So we think the Greatland proposition is quite remarkable. We're a little bit off the beaten track right now. Where we talked about again off camera about being AIM listed, about being a bit unknown here in Australia. And I like to think we've started the journey of increasing that profile, but the strategy of getting to the ASX, I think, is a huge element of us, being better understood here in Australia and having a higher profile. And we think the more time people spend understanding the Greatland value proposition, the more we can daylight the value.
Yeah, I think the value in our industry is about having these conversations, really about understanding what's the potential upside. And I do see that, with your Havieron, where you're going to be able to develop that to a beast of its own. The potential of Telfer is, if you did find, like I said in that Kundana stories, you did find something of significance there. the underlying value is hard to get for anybody. And I think maybe in some ways for a big major, it's very hard to get that value out because it's not big enough. It's not another 20 million ounce for you guys. Another million ounces makes a world of difference. But yeah, great story, and I'm glad that we finally had this chat. We spoke to Callum Bax, as I mentioned to you, about the discovery of Havieron. It's nice to get this side of the story. Any last words?
Oh, look, you mentioned Callum, and Callum Baxter is the greenfields geologist that founded the company, and our exploration geologist who founded the company and discovered Havieron. Deserves all the credit in the world. I think did a great job. Brought me into the company, and I joined when we started the Havieron decline, really to deliver the project as opposed to find it. But we are standing on his shoulders a little bit. He said, he found, I think, one of Australia's great gold copper ore bodies, and that I think it took Greatland kind of 15 years to be an overnight success with the discovery of Havieron. But I think this transaction that we completed in December has been the next big catalyst in the growth of Greatland. And I think to have at our core a 20+ year low cost asset gives us a chance to achieve something great with this platform, and we're excited about that. And I'm just really grateful to the shareholders we have and the shareholders that came in more recently to support us in this transaction, and hugely grateful to the team that's come in, because it's the team that are delivering the ounce profile at site. It's the team that kind of drives the transaction due diligence and the structuring, and I'm really proud of the team we've put together.
Yeah, I mean, perfect climate to do this too. I mean, I do see where gold price is in the gold environment with a lot more legs. Congratulations, great move over. I mean, you said a decade of overnight success. Look, Shaun, thanks for your time. And obviously, you can't go away without any coffee from Coffee with Samso. So those are from us. And see you next time. Maybe we'll catch up and see what you're doing after the IPO.
Really appreciate the conversation and you reading into the story ahead of time. So thanks very much for the coffee, and appreciate being on the program.
All right. Thank you.